There are certain people that are older towards retirement. You want to be obviously safer with those investments. If you're somewhere my age, I'm 40 years old, what you want to do is you probably keep about 50% in stocks, and that could be long or short, obviously choosing and swing trading the right stocks that'll be good opportunities. But I think 50% in the market, the stock market, and then diversify out in other things. I mean, again, you can look at commodities like oil maybe. I like oil on the short side personally at this point, but definitely those would be the allocation area. And you have the government spending. The inflation, whether it's going to be transitory in the short run or not, is going to continue and likely at a higher pace than the Federal Reserve will want, whether it's 3% or 4%. You want to have that diversification out of the dollars, at least with a portion of your portfolio. So the bottom line is look to continue to accumulate gold. Like my next buy level on the GLD is around 163. There's a gap fill, and you can see this pivot right here. Let me zoom in. So pivot here, that's support, then a nice little gap fill right before the breakout. That would be another add level. And then here would be another point. And then basically I'd even add more down here. So that's where I'm at in terms of my investments on gold. I continue to look to accumulate, potentially puts pressure on gold. Or is it because of inflation pressures that are getting away from the Federal Reserve? If they're forced to because of inflation pressures, then I think, again, it will be a positive for gold versus a negative. With the dollar, it's a little bit more skewed. I still ultimately think that the dollar will continue lower in the longer term, even if it has a short-term pop here.
We have a few questions about Basel III in regards to gold. Topical subject.
For me, again, as a technical trader, I focus solely on the charts, and then I kind of hear the background noise and I say, okay, is this something that would make me get nervous about my position? And then I go reevaluate. And if I still am not super nervous about that position, then I say, okay, I'm going to continue until proven otherwise. And the great thing about the charts is that charts are very black and white. There's no kind of middle ground. It's like it's a breakout or it's a breakdown or it's not. And there have been bottlenecks because of the COVID shutdown. You're not going to see inflation at the 8% or crazy levels that we have seen it here. There's going to be a moderation. That is going to make the Fed claim victory on being transitory. I think that is wrong. I think that you're going to be at a new normal for inflation going forward where you're not going to ever get back to 2%. I think maybe 3 to 4% is going to be the new norm. But watch the Fed try to claim victory when inflation comes down from 8% or 6% back to 4%. They'll say, oh, it's transitory. See, look what's happening. And then, in my opinion, it will never get back to 2%.
So the goalpost just got moved to the right. Is basically what you're saying.
That's what the Fed does. There's always, and I think this is something that a lot of people don't understand, is that, like I mentioned earlier, charts are all about probability. So when you get consolidations after a big move up where it stays in the upper, what I like to call the upper 50% of the move. So if you take this low here to this recent high, you can see all the sideways action has been in the upper 50% of that move. And just historically, if you look at charts like this, the probabilities tell us that eventually these charts are going to break out. From a psychological standpoint, silver had this massive move up, and then there's been a lot of people that have said, okay, let me take some money off the table, and it created sellers. What you like to see and why this is bullish is that it wasn't like there were only sellers. It's not like the silver chart went all the way back to the lows. There was a little selling and then buying pressure, and then selling and then buying pressure. And the buying pressure is telling you that there's accumulation going on. Even though there's sellers, there's still accumulation. And that's why the stock, or in this case the ETF, has held near the highs.
Which do you think has better upside potential, gold or silver? Let's just stick to this year.
This year, wow.
Let's start with this year and we can branch out.
This year, so I personally am long gold this year as of now. It doesn't mean I won't buy silver if it dips a little bit lower, but I am long gold. For me, it's a safer trade. So to choose between gold or the miners, you'd want to go with the miners if you're a believer in the gold trade. There is more risk to it though, obviously.
But suppose we have an inflationary environment. The second part of the question leads into that. Suppose we have inflation, wouldn't gas go up? Wouldn't raw commodities go up? Wouldn't input costs for miners go up? Wouldn't that shrink their margins, Gareth?
Yes. So if you do see that inflation spike dramatically, I agree. So I'm kind of, and this is where it gets a little bit more hazy for me in terms of inflation, right? So my biggest concern is that you're going to see inflation, but you're also going to see an economy that stalls out and goes back to a lower growth rate of like 2% or 1% on GDP. And my concern there, and why I think the miners may still be a good place to bet, is that oil, if the economy starts to get some slack and slows, oil could actually see a drop even while inflation is strong. This was a previous support going back to January of this year. We then had the big run to 65,000, and then it's traded down to 30,000 again. The more you hammer on this 30,000 level, the weaker it gets, but it hasn't gotten there. It hasn't broken yet. Every time I do these interviews, I always talk to people and I say, listen, once it breaks 30,000, it's a lock to go to probably about 20,000, maybe even a little bit below. But in the near term, it could trade up as high, and I've said this on record, and I continue to say this, is that it could trade up as high as this 50,000 level. The reason I have that level penciled in as a potential upside maximum, and by the way, that's a maximum, so 50,000-ish, give or take, would be my max upside, is because it's a gap fill, and it's a retrace to the head and shoulder neckline. So earlier on in this broadcast, we were talking about that very chart, a chart that was very similar that had retraced to the neckline. It was the Tesla, right? So Tesla's doing exactly what you could argue Bitcoin may do. So if you look at Bitcoin, right, it came down to this support here, it held, and then it's basically traded sideways to up. Now, with Bitcoin, that's the same thing that could happen. It would still be bearish to me. Now, again, I always like to say, longer term, 100,000, 500,000, it's going there. But again, as if you're a hodler, don't worry about these interim moves. Just, don't even look at your Bitcoin. We saw Elon Musk pull back on Bitcoin just a little bit over that, saying that he would resume, being super nutty about Bitcoin once they did start mining it with more renewables. Now, I know a lot of renewables are being used, but the corporate side, right, we haven't really seen new companies announcing positions in Bitcoin. And I think really the energy side and how much energy is used is why. So what you need to do is you need to see this kind of chop finish out. I do think, again, short term, you could trade up a little bit higher, maybe even as high, like I said, 48 to 50,000. But the bigger move to the upside is going to happen when you get more renewables involved here to really make corporate America feel better about buying Bitcoin. Then it's all in, and then that's where you go to 100,000 and 500,000. I want something where I know that there can only be a stated run of X amount. And that's where something like Bitcoin comes in. I don't trust the Federal Reserve. I don't trust the government. I don't trust central banks around the world. Even with China. I mean, China wants the digital yuan to be the new reserve currency, but they still can print as much as they want, and they don't even have to be, open about it, right? I mean, they could just say, hey, this is what it is, but do we really know that's what it is?
So if you were the CFO of a company, you would say no to Fedcoin, to adding that to your balance sheet.
Well, I think as a CEO, you have to kind of kiss butt, essentially, to the Federal Reserve. So
you aren't seeing the volume yet to send BTC bullish, are we?
No, you're not seeing the volume for sure. There's kind of this period now where you've flushed out some weak hands in Bitcoin, but you're also not seeing the buyers being willing to step up just yet. So people are still nervous. I mean, there's still a lot of chatter about further downside. Like, I don't foresee myself, going to Starbucks and buying a coffee with Bitcoin. Not to say that you
live in El Salvador, then maybe you could.
That's right. I mean, there's going to be certain countries where that is, but even in certain countries like Venezuela and stuff, people are buying Bitcoin, but then I believe to do transactions, they're converting it back or selling it back to, they're just basically saving themselves from massive inflation in these countries by buying Bitcoin and kind of, holding it while the inflation takes hold in the currency. One of the reasons why I think it's smart to diversify. Now, for me, my biggest holding is still going to be Bitcoin, but certainly a close second would be Ether, and I think that protects me against that possibility.